Reacting though the last few days or the last few weeks is Bharat Forge. It zoomed to record highs after multi-axle truck sales saw a significant pickup in momentum. Now, will this momentum sustain, and is that all that is to this story? Have the fundamentals really shifted in favor of Bharat Forge? We just thought we'll take a bit of a critical look at this piece. Keep in mind, it also goes ex-bonus tomorrow, so some of the buying could well be for the bonus stripping as well. But here are the possible reasons for an uptick. These are all possible reasons. I'm not saying this is the only reason, but truck sales and oil rig counts in North America have shown an uptick and a significant uptick. I'll get down to those numbers as well. Mining and construction orders, almost all the analyst reports suggest that these could start firming up over the next 18 months. Not just the next 6 months, but over the next 18 months across the world in certain pockets which are the end markets for Bharat Forge. These orders could start firming up. And earnings growth could materially scale up in FY19 and FY20. FY18 might just be back to basics, and then FY19 and FY20 could be the really big triggers for Bharat Forge. So here are some numbers, and whether they are green shoots or no remains to be seen, but here are some numbers. New truck volumes in North America have grown 40% YTD, and Bharat Forge derives 40% of its overall revenue from the US and the EU truck markets, about 20 or 25 odd percent from the US truck markets. And all of its customers, Caterpillar, Cummins, AGCO, have all raised that calendar year 17 growth forecast. This points towards the end market customers very bullish about their business, and therefore Bharat Forge, being a key component supplier, could see an uptick there. India August truck sales have grown. The August data that we had was 42%, July was about 15%. So there is a bit of a spurt that is happening in the Indian truck sales as well. And 15% of Bharat Forge's consolidated revenues comes in from the Indian truck makers. So that basket, which is about 55%, which comes in from commercial vehicles, is showing an uptick. The remaining 30% from oil and gas and mining, which may start firming up in FY19, FY20. So there are some green shoots in place. Whether they actually materially change the landscape remains to be seen. And therefore, almost all analysts are pegging the numbers to start improving dramatically FY19, FY20 onwards. There are some concerns though out here, guys. One, a lot of people are factoring in defense-related orders for Bharat Forge, India as well, which I think should be taken with a pinch of salt or maybe with a bucket of salt, because defense really hasn't materially changed the landscape for any of the defense-related companies.
Okay, I have a point to make after you finish on that.
Sure.
Very brief one though.
Okay, so that is one. Two, rupee appreciation. We've been talking about how this could materially hurt earnings for Bharat Forge as well. That's a big no-no. So if indeed, I mean, we'll get to know what happened in the quarter gone by.
Or rupee depreciation if you were reading Ira's column on BloombergQuint.com.
Okay, so we'll talk about that as well. Maybe it has a point to make too. But for Bharat Forge in particular, maybe the rupee appreciation and dollar devaluation could actually materially hurt earnings. So that is two. And decline in commodity prices. I know me and Ira had this whole debate about whether we've reached the peak of the commodity cycle or no. And I was on the flip side, and I was saying that maybe there is some more room to go. But if indeed this cycle were to turn around, then that could materially affect capex for miners and therefore revenues for Bharat Forge. And last but most importantly, it's already trading at a premium to its 5-year averages. The 5-year average EV EBITDA multiples where we value Bharat Forge was about 13.5. It's already trading about 15.5. And if it does go to the target prices that brokerages are putting out, that would be about 17 times. That's pretty expensive compared to what it's done for a company which is not in the midst of an earnings recovery. It's probably at the starting point of an earnings recovery cycle. So the valuations are slightly expensive.
Okay, just one very brief point to make on defense. You know, I brought this up with L&T as well, because for the last 2 years, all of these companies have been fairly gung-ho about being able to bag different parts of the defense spectrum, but being able to bag big orders. And I said, are they coming through? And he said, in a trickle, but when the order does come, it's so large that it has a meaningful impact on your numbers in some fashion.
Right.
So you're never going to get 25 orders, you'll get 2 or 3, and he counted 2 or 3 for me in that interview, saying that they add up to 25,000 crores, the kind of orders that L&T was targeting, not necessarily the same numbers for Bharat Forge.
Right.
So it could have a meaningful impact even if they were able to get that 1 or 2 key orders that they were hoping on. So yes, I know the jury's still out on how quickly the defense numbers or orders will come in. But when they do, it will be meaningful for numbers.
Yeah, just difficult to pencil in, Dominka, those numbers.
No, absolutely. And valuation concerns fairly pointed out on Bharat Forge.